Thank you for inviting me. I am a tax professional. My name is Deepak Sharma. In Hindi, Deepak Sharma. I am in Burlington, Ontario, and I practice accounting, taxes, taxation since 1997 here. Some of the years part-time, and now it's full-time because I used to work for Bank of Montreal before. Just to clarify my background a little bit. So I have a lot of clients. I help them with income tax and benefits returns. It's called benefits as well for a reason, because benefits are part of our income tax system. People, if they have like zero income, nothing to declare, even they should file the tax return, because they can at least get the GST refund, OTB, which is Ontario Trillium benefit, which is actually provincial tax credits, those kind of benefits. And of course, a very important one is the child tax benefit for the people who have children, small children. They need to get that child tax benefit, and nowadays it's a huge amount government is dishing out, so don't miss out on those. And for the newcomers, is also important that they file the tax return in the first year. Don't dilly-dally, because a lot of things will depend on whether you file your tax return or not. And later on, then if you haven't filed for 1 or 2 years, then you're scrambling to file, because other government agencies ask you, okay, have you filed the tax return? No. Okay, now you don't get this benefit or that thing or that document. So it's very important. Tax is a part of life here, so we have to make sure we file our tax returns on time. So I'm today going to cover personal income tax, which is for the personal employment income and self-employed as well. So from that perspective, I'll start with the deadline for filing tax returns, which every year is normally 30th of April for the personal income from employment income and any other incomes other than self-employed. Self-employeds have to file by 15th of June, but everybody have to pay their tax owing. If they owe tax, they have to pay by 30th of April. If not, then the penalties accrue, and that will be like 5% penalty on the first month, and then each following month there will be 1% extra interest that the government charges for on the unpaid tax amount. So that's the deadline part. Now, ways to file. This is very important for students as well. So I'm going to cover some of the things that students have to be careful about in my presentation. So ways to file is electronic with certified net file software. Some of those are free, may not be that good. The ones that you pay for, I'm not gonna sound out any names, but you can find those in any stores when the tax season is here. And that tax season incidentally starts from mid-February, when CRA opens up their systems to start accepting the tax returns for the year before. The year runs from January to December, January 1 to December 31, and tax returns have to be filed by April 30th of the following year. So mid-February, the tax season basically starts for us. So you can use the net file software. You can file a tax return on paper, but you have to ask for the paper copy of tax return, or you can print out the forms from online from CRA. CRA, incidentally, Canada Revenue Agency, which deals with all our taxation matters in Canada. You can file by phone with file my return, um, and that is possible if you are eligible, and CRA will let you know if you are eligible for by phone filing, because it's got to be very simple tax return, like you have one T4, two T4 slips, or two other slips, one or two benefits to apply for. Then it's easier. You just punching the numbers when you're on the phone, and your return gets filed. Um, Other than that, any more complications than that, they won't allow you to file on by phone. You will have to either file by electronics or paper, or go to a tax professional. And there are community volunteer programs also in this country, where CRA has organized that, where people who don't have much knowledge about taxes and they want help, but they don't have money to pay, they can go there, and there are some volunteers, trained volunteers, who actually prepare your tax returns. They do not deal with the business tax returns. They just do the normal uh, looking employment income. They don't even do the self-employed tax returns. They just do employment income, any other income, smaller, simpler tax returns for you, and they get those out of the way so that you don't have to pay anything. You just go stand in line, take your number, and they will help you. Those are free clinics operating everywhere in Canada, and it can be found on CRA's website. Tax professionals, that's persons like me who operate their business after learning the whole tax theory and everything, passing exams and stuff, which I did from H&R Block back in 1998. But I started preparing, learning uh, tax returns in 1997. So those are fee based, and they charge fee according to the amount of work involved in any tax return. So they are comprehensive, and their service is with advice also. And one should look for a tax professional uh, who who has good ethics. They advise you on services, don't hurry you up, and just get you out of the way, that sort of thing. So just do your due diligence to find the right tax professional, and that will help your cause for taxation, because if it's filed correct first time, then there are no problems later on. You can rest easy, and your benefits will start on time. Everything will happen. So for filing, there is a step one in which you're going to need to give the tax professional, or if you're filing yourself, you're going to need your SIN number, your marital status. You have to fill in the dependents page, where children's date of births and names, etc., go in there. If they have SIN number, that goes in there. You have to, if you're filing first time, you better make sure you sign up for the direct deposit, and there is a direct deposit page in every tax return. You can fill that in for the first time only, and that's your banking information goes in there, where Canada Revenue Agency can deposit your refunds if you're getting a refund. um, and benefits also go in the same account. Your address for sure, and then the world income, which is Schedule A, it needs to be filled out for the first time. When you enter this country, you put in a date there, entered month, date, and that will generate some more boxes which will say, okay, now fill in the world income. And if you lived part of the year in another country and you came in the middle of the year or another, whichever date, Canada Revenue Agency wants to know what was your income from the other country or countries where you lived during that year. Um, that income may or may not be taxable, but it has to be declared. They need to know that. So that form has to be filled out and mailed to CRA. From my experience, I have not seen that form getting e-filed with all the electronic documents that we have. So either you do that, or after filing your tax return, you can call CRA, say, I have filed my tax return a few weeks ago. Do you have it? It's electronic, so you should have it. Can you just make note of my world income? My income was this and this. They can help you that on the phone as well, because the form is not getting e-filed, And if you don't do that, then your benefits, which is GST refunds, OTB refunds, those will not be started, because they have to do some calculations based on the world income included in the calculations. And that's how they figure out your benefits, how much it should be or it shouldn't be. So it's very important. And I ask all the newcomers who come to me first time filing to, I prepared that form for them, and I just give them the address on it and say, mail it out, sign it and mail it out to CRA. And once they get it, nowadays it's slow, paperwork is very slow due to COVID these days, but they will get it eventually, and they will process it in their system. And step 2, well, within that step 1, I would recommend that you register for CRA online mail, because when you are here, you suppose you're living in a rented place, and then you're moving, and then you're moving again. It's hard to inform CRA about your change of address very quickly sometimes. So it's better if you register for CRA online mail, then you can always check your mail online, and they will send you an email that way to check your important mails when it's ready, like your notice of assessment, for example, which is very important. That's after filing tax return, you get notice of assessment a couple of weeks later. And e-file return, you should authorize the e-filer, like me, person like me, filing tax return for you. I would like you to say, yes, okay, I authorize you as an e-filer for CRA contact. There is another place for that to mark. That way, if CRA has any questions, they can call me first rather than calling you. If it's a simple thing, I can answer that question for them. Or they even need something faxed to them or uploaded to them, I can do that, so that it's less headache for the taxpayer. One less thing to do, Otherwise, you should keep all your copies, everything with you for 6 years, because it's important. CRA says you should keep your 6 years worth of all documents, receipts, and forms, etc. Backup papers. If they need it, they will just ask for it, and you have to let them have it. Step 2, uh, report your income. Report income means T4 slips that your employers give you after the year is over. You get T4 slips by February, and that's the tax filing time anyways. So um, T3 slips and T5 slips, those you get from your banks, mostly your financial institutions provide that for investments like interest earned, or your stocks if you have those dividends earned, those kinds of things, those come up on T3 and T5 slips. And uh, and CRA is saying that you should uh, report even the cash earned. Like somebody is working for a restaurant and getting tips, they should report the tips. Even the tips are in cash. You should note down those, and you should report that as income, part of your income. And any inside and outside Canada income, all of that has to be reported. Somebody worked part of the year in Canada, part of the year somewhere else, or working here and earning money from some other company who is, let's say, located in Germany or Saudi Arabia, somewhere else, and they're paying them from that country. That is also income, and you're getting that money in Canada. You should report that in your tax return in Canada. If the taxes are paid on that income in that country, of course, it will be noted on those documents how much tax they have deducted in that country, and that can be entered as a tax deduction in your tax return. When we enter that slip, we enter that as a deduction, and you get a tax deduction for the taxes paid in the other country. Step 3, claim deductions, very important. Uh, we don't want to miss any deductions, because that's how our tax owing amount comes down. We don't want to pay tax that we don't have to, or we shouldn't be paying tax on. So claim all the deductions which are important, which you are eligible for. Tax credits, expenses, but keep receipts and support documents, uh, because CRA often just audits randomly. They ask for tax papers and support documents. Sometimes, even if you are not expecting, they certainly ask for it. And if you keep all the documents with you, it's easy to furnish those documents to CRA without any problem. And if you don't have those, they're just going to disallow that claim, and they will reassess your tax return and say, oh, now you owe us tax, and you also owe us penalty for late payment, because now it's late. It's few months gone already. So those are the 3 steps, basic steps for filing the tax return. Taxpayers should know that each taxpayer have a personal allowance on which they do not have to pay tax on. Suppose you earned up to 12,000, 13,000, 14,000 only in the year. You didn't have to pay tax on $12,069 in year 2019, last year. Next year, it will go up a little bit. The allowance keeps going up a little bit according to the rate of inflation, they're saying, but it just goes up a few dollars. So that's something to keep in mind. Now I will cover the students, which are a huge number of students coming into this country. And when they come here, they don't have any clue about taxation. And I see all these 17, 18, 19-year-old kids coming, and we call them kids. They're adults now, but we don't grow up. I feel myself kids sometimes, uh, so they don't have any clue. And they should know that they got to file the tax return. It's important. And just like I explained, they just give me the entry date, and then it says, okay, fill in your world income. Most of them have zero income overseas, so we fill out that Schedule A with zero income, and they sign it and mail it out. But the important things that they need to file is, because they're in some college or university, so they get a tuition fee receipt form, which is called T2202, and that is on their university or college website. When they sign into their account, they find it there. uh, when they see all these taxation documents, tax documents, etc., that's where they find it. And along with that, they can also find a T4A slip, which is for scholarship or grant, things like those. If they get that, they should also download that. So T2202 for tuition fee receipt, and the T4A slip for scholarships and grants. These are two important documents for them to have a start their tax return. Um, the T4A slips, if they're in full-time education, it's not taxed anyways. It goes in a certain box where it says it's not taxable because they are in full-time education. When we fill out the T2202 receipt, it says number of months they studied, full or part-time. So we fill that box, how many months, full, 8 months full time. As soon as the T4A slip area finds out that they were in full time, I fill it in, they were in full time, and it matches, no tax on that income. It is an income, but there's no tax on that. If they're in part time, then it goes in a tax area that it is taxable. But since they have already like $12,069 personal allowance, and they don't have much income or no income during that year, they just studied, so they no tax anyways. The other things that they need to be mindful about is the rent receipt, because they are in low income group. In Ontario, we have the OTB, Ontario Trillium Benefit, which is provincial tax credit, and that basically is like $200, $300 or so. But if somebody has paid tax rent, then if we fill out the rent in that ONBEN page for Ontario, and their OTB refunds go up, something like from 300 to 7, 800, 900, depending on how much rent you paid. the the same page works for property tax as well, the people who own the property, but we are talking about students here. They probably don't have property yet, so they should get a rent receipt from their landlord, and it should have a landlord's name, address, and if phone number is there, good. But they should say how many months, which months they stayed in their property, and how much rent they paid in that particular year. And that works for us, because sometimes, or most of the times, CRA is asking us to fax them that receipt, because in the past few years, there has been a lot of fraud as well. Like students have been filing their tax return and filling out like huge amounts of rent just to be able to claim more benefits. So they started asking for the rent receipts to be mailed out or faxed to them. So that's important part for benefits. If they have done a charitable donation, they should keep the receipt. It's worth something, because it can be piled for 5 years nowadays. Before it was 1 year only, but you can enter it, and if it is not claimable because you don't owe any tax, so you're not going to get any refund on that charitable donation, but it will carry forward for 5 years. And next year you add another one or two receipts, next year more one or two receipts. Ultimately, when you start earning income and you owe taxes, all those are going to be going towards a deduction, which is good. You will get some tax back. So charitable receipts are important if you donate. Medical out-of-pocket expenses. For those, you just keep receipts for all kinds of medical expenses that's out of your pocket. And that only works for the 12-month period. It cannot be piled for 5 years or anything like the donation part. Medical expenses only for 12 months they allow. So you got to keep the receipts. If you earned income, a lot of income during that year, and you owe tax, you think, then it's better that you have a huge amount of medical expense, unfortunately. Then you bring those receipts, and then we enter those in that year, and you get some refund. The important thing for medical is that it has the total of medical expenses have to be over 3% of your income. Only then it will work. Okay. But also, if there is no tax owing for that year, even if you keep on entering a lot of medical expenses, you're not getting anything. So you earn, you owe tax, you have large medical expenses, yes, it will work. So that's my presentation in brief for the tax for personal income taxes. The self-employed one is much more detailed. That cannot be covered in this segment, maybe some other time. But if you guys have any question, please ask me, and I will do my best to answer those questions for this interview. Thank you.
Well, sir, thank you so much for the insightful conversation, thought that you actually had. Great information shared, and that gives us a perspective, especially when someone is taking the route of a student or coming in as a newcomer. So, thank you so much for that. A few questions that we have for you. So, I'll actually go with one to start with. I understand that when someone moves into the country, they either become a resident or come in as a student. But then at what point does that individual qualify to be a tax resident of Canada?
Tax resident? What do you mean by that?
A tax resident. So is it mandatory for anyone who actually moves into the country to be filing their taxes, or do they have to wait until they earn some income in the country?
They can skip filing the tax return. Anybody can, actually. In my experience, there are people who are full-fledged citizens. In fact, some people who used to work with me gave me to file their 5 years worth of tax returns in one shot. And I asked them, why would you do that? My income was at a level where I wasn't gonna get any benefits, and I knew I didn't owe much taxes, or maybe I was just gonna get some refund anyways. So what's the point? I'm not gonna file my tax return. I was lazy. So you want your fees? Go ahead, file my tax returns. That kind of situation. That's fine. You can file your tax returns late, uh, but you are the ones missing out on the benefits on time. And to keep in mind, uh, if you are late filing tax return, let's say more than 3 years, Canada Revenue Agency will only consider your benefits that you missed out for the last 3 years. And beyond that, they will say, no, we have only limit for the last 3 years that we will give you in lump sum, and then we start your benefits from that point on, whatever we owe you. So either we owe them or they owe us. This is how it works. So if something is owed to you, you might as well get it. What's the point of leaving it in somebody else's hands?
Sure, that absolutely makes sense. So, for the benefit of our audience, we would love it if you could explain to us what is a T4 and what is sin.
Okay, the sin is the not like the sins we do in our life. It's a social insurance number. That's simple as that. So when you enter this country and you go to the Service Canada office and you say, I'm new here, I need my documents, and um, this is the first thing you get from them, social insurance number. And they give you a piece of paper. Before, they used to give you a card. Now piece of paper, it has your 9-digit sin number, social insurance number. With that, you can go look for a job. An employer will ask you, first thing, what's your sin number? Show me your sin card, or the sin paper. And that works in everything. You go to bank and you want to open an account. They'll say, okay, what's your sin number? Just like in India, we have things like Aadhaar card and things like that nowadays. uh, Same thing here. SIN number works everywhere, and in the tax returns also, same thing. So that's the SIN number. What was the other question?
The other one was T4.
T4. T4 is basically the sum and total of all the pay stubs, pay slips that you get. Suppose you work for a company and they pay you bi-weekly or monthly. They at the end of that bi-weekly or month, they give you a pay stub which says, okay, this is how much was your total salary. Then we deducted tax out of it. We deducted CPP, Canada Pension Plan, out of it. We deducted your portion of employment insurance out of EI, out of it, or any other deductions if they have, like pension or something else. And then this is the money that you got in your bank, because most of them have direct deposit to your bank. So all of that just totaled up is on a piece of paper called T4 slip. Every employer has to issue a T4 slip to their employee after the year end, and they have only up to the end of February to give it to them, because Revenue Canada said if you delay more than that, sending copy to your employee as well as sending a copy to the CRA, then you will get penalized. We will charge you penalty if you delay that. So it's important document. for employees to file their tax return and CRA to know uh, how much the employer paid the employee. Of course, employers have to file the tax that they deduct and CPP and EI to CRA. They have to submit the cash and all every month. So CRA knows that, but they also want this formality to be completed so that the employees who are also taxpayers are able to file their tax return in a proper manner, which is sorted out in the tax return, which we call T1. T1 is the personal tax return. And when they have to file T1, they need T4. It's all about tea. Yeah, you know. So we can have a cup of tea and start filing all our tea slips.
Thank you so much, sir. I love your sense of humor.
Mhm. Hi, thank you
Hi.
for this chat. I came here as a student, and it was very opening my eyes to what I have to do now. I just have two questions. First, is there any deduction for any transit passes? And the second one is, as newcomer and moving here, does the moving expenses we can deduct? We have to deduct. What do we have to do with that?
Okay, yeah, good question. So public transit passes, we used to have deduction for it. In the past few years, government started that out so that people start using public transit more often rather than just driving their cars, you know, because the atmosphere is warming up, you know, global warming is happening. So they're encouraging public transit. But lately they have phased it out. That was phased out July 2017. After that, there's no more public transit deductions. Looks like it's going to start again. You know, when the government changes from liberals to conservatives, they bring some other deductions, and then liberals say, okay, no, we're going to stop this and we're going to start some other deductions. That keeps happening with the change of governments. So for now, no public transit pass deductions. If you paid, let's say your Go train pass for the whole year, every month, you're not getting any deduction on it. So no need to save your Go train passes and stuff right now. The moving expenses that you mentioned, you can claim if you moved from another place or even another country to here. Let's say a student moved from India or some other country, but they came here to study in a university course. So for those kind of students, what I have read, they only allow you to deduct those expenses. You tally up all the total expenses, and you can deduct those from the grant that you're getting. So that, let's say you got a T4A slip for grant, a huge amount because you are a PhD student or some other big name uh, college study course, and you're paying huge fees as well, but you're also getting huge grants as well. So you can deduct it off the grant. So your grant income will be that much less to be reported in your tax return. That's for the students. The other people that claim moving expenses are the employees mostly. If an employee is told you have to move from this city to the other city, and the other place is more than 40 kilometers away from the previous one, your residence, then you can claim the moving expenses. That includes all the trucking, all the everything. Some people move from one province to another, and they claim even the hotel expenses, their food expenses, their trucking, furniture expenses, those kind of things. They claim everything on the moving expenses form, and that's quite an extensive form to fill out, like meticulously has to be filled out. Otherwise, it gets disallowed. If it has to be, and all the documents, all the receipts have to be kept, because most of the time they end up asking for those copies to be sent to CRA. So that's the moving expenses.
Okay, thank you very much.
Welcome.
Another question, sir.
Yeah.
So I understand that for a newcomer, when the newcomer actually sets into the country, is it advisable that the person files their taxes in Canada as well as in the country from he or she is moving?
Yeah, it all depends, like how they are going to benefit from the whole situation, because taxation is something like, as I said, you owe me, I owe you. So if the taxation authority owes you, you want to get some money back. So if in another country you have an obligation to file the tax return, you have to file that tax return in that country too. Yeah, I can tell you, between US and here, a lot of people have to file two tax returns. They're working in Canada and then they're working in US. I have some clients living in Windsor. They're physiotherapists, just an example. They're working in Canada, and they got a job in US. So they just drive through the border, uh, work there, and then they drive back here to their home every day. Every day they're commuting between US and Canada. They're filing two tax returns for sure, because they're getting their income from US, and US wants them to file income tax return there. And also US have the same thing about world income. They want to know what you earned in Canada. But again, the slips have the taxes noted on it, how much tax was deducted, and the eligible amounts which are taxes deducted can be mentioned in the filing in that country. So if you paid taxes in US and you got a slip from US and you have to report here in Canada in your world income, then we enter the income, then we enter the tax deducted, and that works in your favor because that gives you a tax deduction in your tax return. So same thing happens in US, and I suppose same thing happens in most countries, including India, because they got the similar kind of tax codes nowadays. Everybody's following each other.
Thank you so much.
You're welcome.
Well, sir, I just wanted to end this by thanking you immensely for all your advice, your insight, your information. I think I wish when I was moving a few years back, I had someone talk to me about this. It would have made my journey a lot less stressful, and it would have really made things a lot easier. So we really think that it's amazing that you're doing this and you're sharing this insight to newcomers, to students, to working professionals who are looking to come in. So thank you so very much. And from CanReady, from our team out here, thank you so much for your time.
Yeah, I'm glad to do that, and I have trained a few people in my time during last few years, and they are now practicing their own accounting companies, and they are successful and doing great work. And that's because I want to give back to my community as well. So I do my part. For sure, everybody does that. I'm sure, we are all human beings, and we have those, goodness in us, built in by God, Creator. So we do that part.
That's wonderful. I hope and pray that there are more of you out there, and I think the world needs it. So that's it once again. Thank you very much.